The absolute reality of the stock market is this. Through the years, there has been no better tool for building wealth over time. Nothing has matched it. The average return of the S&P 500 comes out to be about 10% every year. So if you plug in plenty of patience, a low-cost ETF like the Vanguard S&P 500, the VOO, can build a person's savings into a modest retirement fund. But for MoonShot Money, we can't feel very much horsepower in VOO. We're looking for a little more vroom vroom. We're not looking for a Ford Fiesta. We want a Ferrari. Finding Ferrari-type growth stocks. Where are they and what are they? This is the MoonShot Money channel. I'm Chase Vickers. Are you ready? Let's go. Welcome back and thanks for hanging out with me for a little while today. Follow us over on Twitter at MoonShot Money 1 for fast-moving information and breaking news that matters. So what is a growth stock? Growth stocks are companies that increase their revenue and earnings at a much faster pace than the average company. Often a supercharged growth company has developed an amazing disruptive product or service that is gaining traction around every corner. They are entering new markets or even creating entirely new industries. And the faster these companies grow, the bigger the returns are for us. Value stocks or Ford Fiestas use metrics like price to earnings, price to sales, and price to free cash flow ratios to determine value. Ferrari growth stocks can't be measured the same way. Growth stocks can be found in all shapes and sizes. They are here in the United States and international as well. The world is your oyster when it comes to finding growth stocks. So how do you find great growth stocks? To find great growth stocks, you'll need to, number one, discover supercharged market trends and the companies that are sitting in the pole position or close. Number two, keep researching until you discover companies with strong competitive advantages. And number three, the Ferrari is the company who meets the first two strategies and also has a very large addressable market. Trends, how to identify them and find the company's competitors' fears. These companies can capitalize on super trends and increase their sales and profits for decades. If you can find one of these, it can generate wealth for you for years and years. The coronavirus pandemic accelerated many trends that were already well underway. Here are some examples. E-commerce is a hot trend. As more people shop online, Amazon and Shopify have well positioned themselves to profit. Alibaba and JD.com, meanwhile, dominate e-commerce in China. Mercado Libre is sweeping up all the online retail markets in Latin America. Investors have made millions and millions from these companies. Is there a new kid on the block that might be the next e-commerce Ferrari? We think that company is Coupang. South Korea's e-commerce leader just recently became available through an IPO. To our surprise, we discovered that South Korea is the third largest e-commerce market in the world. Feel that potential under the hood? Coupang made headlines with their same-day or next-day delivery promise. They can make good on that because 70% of the 51.7 million population of South Korea live within a 7-mile radius of distribution centers. That's huge and means quick delivery. Out of the 51.7 million Koreans, the customer base is only 14.8 million, so there's a ton of room for growth here. That's up from 11.8 million last year. CNPG is destined to become a version of Amazon. Trend? Check. Competitive advantage? Check. Addressable market? Check. If you're enjoying this video, we would like to ask that you would subscribe to the channel and turn on that notification bell so you never miss another video. We need your help too. It helps us grow the channel more than you actually realize by simply giving us a thumbs up down below. It only takes 2 seconds. Batteries and energy storage are red hot trends too. Solar power, electric cars, robots, artificial intelligence, and social media all have one thing in common. All these technologies require electricity to operate, and much of that electricity comes from, you guessed it, batteries. For instance, TikTok and Instagram are useless if the battery of your phone is dead. Many people, including Warren Buffett and Elon Musk, are investing in batteries and battery companies. Berkshire Hathaway owns the battery maker Duracell. Tesla will spend $5 billion to build its Gigafactory 3 battery plant in China, not to mention solar roofs and Tesla Powerwalls. Tesla is so much more than a car company. If you're looking for the best 5 to 10 year investment in batteries and energy storage, look no further than Tesla. With Tesla, you get so much more than a car company. Elon said in the Q1 conference call just the other day that Tesla is becoming more of an artificial intelligence and robotics company. That's some real breaking news right there. So much is still coming for Tesla. And don't forget, they are going to be making billions and billions of dollars for decades and decades to come. They are still in the early stages of who and what they are. Elon Musk is the Thomas Edison and Benjamin Franklin of our day. You don't know what you don't know. What will Elon and Tesla become in our lifetimes? Our entire family owns Tesla, and we will never sell a single share. What's next for Tesla? Tesla is growing aggressively. It has plenty of plans in the pipeline. Its current production capacity in California and Shanghai amounts to more than 1 million vehicles annually. Moreover, it has Model Y factories in construction in both Texas and Berlin, and plans for facilities for the Cybertruck, Tesla Semi, the Roadster, and other future models are currently in development. Tesla has become a 115 bagger for the first investors among us. We missed the early days. We bought into the fear, uncertainty, and doubt. Doubts on valuations, uncertainty about range, cost, and mainstream appeal. We got it all wrong in the early days. Tesla is a game changer. Already has made its founder the second richest man in the world, and earlier this year he was number 1. Keep in mind, Tesla is not a fully matured company that's topped out and using profits for dividend rather than reinvesting in growth. Hey, the best is yet to come from Tesla. It's not too late if you're still on the sidelines. We also have to mention the ever-expanding supercharger stations. Tesla has 20,000 and growing charging kiosks. This network of superchargers is hard to wrap your mind around. Just think of it this way. It's like Ford also owning gas stations all over the world. That would be something special, right? That's exactly what we own with our Tesla shares. Add to everything I've already said, premium over-the-air repairs and upgrades in your Tesla, an app ecosystem that's just getting started. Plus, they are the leader in the autonomous driving with full self-driving or FSD. Just think about that for a second. You can't put all your trust in 3-month quarterly reports versus everything I've talked about today. Tesla could possibly become the greatest growth story of our lifetime. Listen, it's not too late for you. Watch for dips. In early March of just this year, we were all presented an unbelievable opportunity, and we added to our shares at $575. When most were scared to death, we saw an opportunity. Earn more, save more, invest more, and give more. And remember, if you're not interested in your money, someone else is. Have a great day, everyone, and we'll see you on the moon.